TSX investors sitting on record highs can lock in tax-efficient compounding by targeting names with fresh earnings and dividend hikes before any capital gains policy shifts. This is Modern Investing Techniques, episode 135. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,728, down 0.3%. The NASDAQ Composite closed at 26,445, down 0.6%. The TSX Composite closed at 36,476, flat on the session. Energy and utilities provided the lift that pushed the TSX to another all-time high, while broader U.S. indices slipped. Oil prices advanced amid developments around Iran, giving midstream names like the earlier EPD pick a supportive backdrop. Both the Bank of Canada and the Federal Reserve remain on hold, with the next policy decisions priced for September. Earnings season continues this week with attention on financials and energy names. Benchmark comparison data for the simulated portfolio versus the NASDAQ is not available in today's briefing, so we will track that once the tracker updates. Capital gains tax policy changes create a window for Canadian investors to review unrealized gains inside non-registered accounts before any rate adjustments take effect. Today's news that President Trump is weighing cuts highlights how non-registered accounts could see lower future tax drag on profitable exits. TFSA and RRSP holdings remain unaffected either way. The practical step is to run an ACB report on your non-registered holdings this week and flag any positions with large embedded gains that you might want to realize before a potential policy announcement. This approach worked well in 2019 and 2020, when similar speculation prompted early harvesting without forcing sales inside tax-advantaged accounts. The risk is overtrading on rumor, so only act on positions you already plan to trim for portfolio reasons. Use your broker's tax lot tool or Wealthsimple's gain-loss tracker to run the numbers in under 10 minutes. Canadian investors should also note the current 50% inclusion rate on capital gains and how any reduction would directly increase after-tax proceeds on sales outside registered accounts. The discussion remains active but not yet enacted, giving time for deliberate planning rather than rushed decisions. Imagine you bought a rate-sensitive ETF last week expecting the next inflation print to confirm cooling. Your order filled cleanly, yet the market reaction the next morning hinged on whether one data point was treated as signal or noise. The mechanism is straightforward because monthly CPI prints carry both trend information and one-off distortions from tariffs, seasonality, or energy spikes. A single hotter-than-expected number can shift Fed funds futures pricing by 10 to 15 basis points even when the 6-month trend remains lower. What most retail investors do not realize is that policymakers explicitly weigh the cumulative run of misses against the latest release. The pro tip is to check the Cleveland Fed's nowcast and the NY Fed's multivariate core trend measure the same morning the CPI drops. Those models strip out the volatile components and tell you whether the headline move is likely to stick. The concrete misconception to avoid is treating every monthly deviation as a new regime. Instead, require at least 2 consecutive prints in the same direction before repositioning rate-sensitive holdings. This distinction matters for Canadian investors because Bank of Canada decisions often follow the same cumulative logic, and rate-sensitive holdings such as utilities or REITs in a TFSA can move sharply on even one misinterpreted print. This is a simulated trade for educational purposes only. Today's practice investment of the day is a weekly hold on TMX Group, ticker X.TO on the TSX. The catalyst is fresh quarterly earnings combined with a dividend increase that the market is now repricing toward fair value. The technical setup shows the stock trading near recent highs with volume support and nearest support at the 50-day moving average on the daily chart. Risk assessment notes that a broader market pullback could pressure financials, so the stop loss sits 6% below entry to cap the simulated loss. The target is plus 3% to plus 6% over the 5-day window if the dividend narrative holds. Confidence level is medium because the earnings beat and dividend action align, yet sector rotation into financials remains unconfirmed by volume. This pick demonstrates how to combine an earnings release with a dividend hike to identify potential re-rating candidates while keeping position size modest. Listeners learn to cross-check the dividend announcement against recent price action before committing capital. The TMX Group report specifically ties the earnings beat and dividend increase to renewed focus on fair value, giving a clear fundamental anchor rather than relying on momentum alone. We will track this simulated position through Friday and report the outcome then. The Alt Index app AI Stock List ranks equities daily using alternative data and AI models, with today's top names including Constellation Energy, Jack Henry, and W.W. Grainger. Canadian investors can use the free tier to generate a short list for TFSA review, then run their own fundamental checks on the highest ranked names. It gives an edge by surfacing names outside traditional analyst coverage before momentum builds, and the list also includes Palomar, SoFi, and Granite for a mix of growth and value characteristics. Options Play Covered Call Screener scans for contracts that balance premium income against the risk of shares being called away. Users on the Growth Lab tier can input holdings and instantly see the exact strike and expiration that maximizes yield while respecting personal upside targets. It is especially useful inside a TFSA where tax drag on option premiums is already eliminated, and the screener explicitly shows the trade-off of capping upside in exchange for the collected premium. ARK Invest added 292,873 Rocket Lab shares in a single-day filing, signaling continued conviction in small-cap growth within the space sector. Add RKLB to your watch list and review any existing space-related exposure for rebalancing this week. Supermicro raised its profitability forecast again, extending the AI infrastructure rally into another quarter with guidance exceeding Wall Street expectations. Review any existing SMCI position and consider trimming if it now exceeds your sector allocation target. Volatus Aerospace sets its Q2 earnings release for August 13th after market close, covering the quarter ended June 30th, 2026. Place a price alert on FLT.to at yesterday's close and review the release for any margin or contract updates before deciding on exposure. Rockovina closed the first tranche of its private placement after upsizing and extending the financing to broaden its strategic investor base. Add RKV.V to your small-cap healthcare watch list, but wait for volume confirmation above the 20-day average before any position. Portfolio performance data, including cumulative returns, win rate, and alpha versus the NASDAQ, is not available in today's briefing, so we will report those figures once the tracker updates. Now, here's something that most retail investors get wrong, and it cost me money before I figured it out. You buy a rate-sensitive ETF expecting the next inflation print to confirm cooling, yet the market reaction the next morning hinges on whether one data point is treated as signal or noise. Policymakers explicitly weigh the cumulative run of misses against the latest release. So the pro tip is to check the Cleveland Fed's nowcast and the NY Fed's multivariate core trend measure the same morning the CPI drops. Instead, require at least 2 consecutive prints in the same direction before repositioning rate-sensitive holdings. And this distinction matters for Canadian investors because Bank of Canada decisions often follow the same cumulative logic. Before we wrap, watch for how the TMX Group simulated hold reacts to any follow-through volume on the dividend narrative tomorrow. That wraps up today's modern investing techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. This show comes to you from the NARA Network. If you want another sharp daily briefing, Offshore North has you covered. Offshore Ocean Racing Explained every Monday with a Canadian angle. All our shows are free at naranetwork.com. Prefer reading? Today's full write-up, sources, and transcript are on the episode blog at naranetwork.com. Same briefing, readable format. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't last?